Hello, everyone. Welcome back to Switch Markets Live. I'm Shane Vernier, trading coach over at howtotrade.com. Today, we're going to cover an explosive geopolitical situation. We're going to look at U.S. oil. We also need to recap what the SNB and the BoE did during the overnight. We had a little bit of action. We had one of our trends. I don't know if you remember, we pointed out a trend the last time that we spoke in the Great Britain pound U.S. dollar. We saw a big-time break of that trend line, and now a major sell-off coming on. The dollar's getting back a little bit of puff after what has been an interesting 24 hours. We had the Fed speak. We had the BoE speak. We had the SNB speak. And right now we're going to speak. So I think that it's been probably one of the best times to trade in recent memory. The gold market has been interesting. We're going to cover gold. We're going to talk silver. We're going to do a lot of different things today. We're going to look at really what's going to be an explosive situation, specifically in the Strait of Hormuz. I'm going to tell you why that really is the key to oil prices moving forward with an Israel-Iran potentially U.S. confrontation. And then we're going to get the latest. We're going to get the latest from the White House. We're going to see what Donald Trump and company have planned for the coming 48 hours. We're going to talk a little bit about Pine Connector. We're looking at TradingView. We're looking at MT5. And I'm answering any questions you may have. So before we get started, I hope and pray, and I don't really hope much. Hopes for children and losers. We don't hope. We know. We're confident. So I'm confident everybody out there is doing well. They're excited to be in the markets, and they want to really reach their financial goals and achieve their own individual objectives. Remember, yours are different than mine, but that's okay. You can achieve your objectives. If you have any questions, ask me live chat. I'll be sure to cover it. If in fact you have another question you want to expand on, or maybe have a private dialogue, head on over to How to Trade. Send me a private message, and I'll get back to you in short order. We do have some friends from the How to Trade community joining us right now. Some good stuff. Tuku, always a pleasure to see you, Tuku. And we've got T Marina in the house. T Marina over here on the Switch Markets feed. So good afternoon. It's time to trade. It's time to trade the action well. Yeah, you can see the smile on my face. I'm grinning from ear to ear. This has been a fantastic week for my own personal account. So I'm excited. Tomorrow's no donation Friday for me, so it might be an early out. I might be getting a little bit of sun, relaxing, getting ready to go for what promises to be an absolutely amazing summer. I don't always say that. Sometimes summers are dull. Not this time. All right, let's get right out to price action here. I'm going to start with U.S. oil. If there's any other questions, be sure to ask. This is our 920 crossover strategy, our coded strategy that we talk a lot about over at How to Trade on our live streams. And this really is what I want to point out with just understanding what a crossover is supposed to do. Now, you'll notice we have RSI down there as sort of a confirmation device. You really don't need an RSI on a daily chart, in my opinion. You use something like an RSI or a stochastics or a MACD. That's best designed and best intended to use on like your 5-minute chart, your 15-minute, your 30-minute. That's the area where you really want to lean on confirmation before making trades. Why? Because you're going to make a lot of trades using something like a 920 crossover, or really any kind of crossover on, say, a 1-minute, a 5-minute, or a 15-minute chart. On a daily chart, it's more of a swing trading approach, more of maybe an investiture approach. And I will tell you that the 920 is growing on me, especially when it comes to daily charts and individual stocks. If we have time, we'll try to pick a few stocks with this later on in the session. But right there's our big gold candle. Now, remember, we made a video out at How to Trade Com a while back, and this was our 920 coded. It's very simple. When you get a purple bar, that means we crossed under, you're looking to sell. And then when you get a gold bar, you crossed over and you're looking to buy. So right there, we went into a real choppy area right in mid-May, and there was a lot of reasons for that. We won't recap it, but really we traded in a phone booth with WTI crude for a good 3 weeks, and then the game has officially changed. Right there was your buy signal back on the 2nd of June, really to open June, and you're looking at bidding about 62.97. That's a big deal, and now we're just rocking and rolling north, and you can see that the trend is definitely your friend, and the trend's bullish. Why is the trend bullish? Well, it's relatively simple. I mean, it's all about war right now. War, what is it good for? Absolutely nothing. Say it again. Well, I mean, it's good for crude oil bulls, that's for sure. We know that energy is going to spike. Now, I'm going to get out in front of everybody else in the financial media. I see a lot of people really panicking about oil. I heard minimum $130 a barrel if war breaks out, and I don't believe that for a minute. But we do have to expect some topside extension in the U.S. oil market, and the reason why is because of this right here. This is war. We're talking about U.S. involvement in Iran. We're talking airstrikes. We're talking large-scale attacks. A lot of blustering, and a lot of saber rattling. Each person's talking. Now, remember, there's a few things that are going to drive sentiment towards the energy markets if war does in fact break out. Now, oil traders are used to war. I mean, I'm an oil specialist. I go back to 2011. I traded Arab Spring. I was there. I watched what was happening. I watched the explosive participation. And what I'm saying is this. It's not necessarily that the U.S. gets involved in the Israel-Iran war. That's not necessarily what's going to drive prices high. These two things will. Number one, terror attacks on international soil from Iranian sleeper cells. No question about it. That could be a major surprise market driver, a big one. Number two, what's number two? You got to know this if you're trading crude oil. Strait of Hormuz. Strait of Hormuz is everything. Iran's already threatened to close the Strait of Hormuz. Thing to remember here is that 20% of your global petroleum liquids consumption go through there, 20 million barrels a day. 20 million barrels a day go through the Strait of Hormuz. So what exactly is the issue here? Is it easy to keep open? Is it easy to close? You can see right here, Iran, it's right beneath my picture here, Iran borders the Strait of Hormuz. Here's the issue. It's a shallow port. It's not really a port, but it's a shallow channel. Excuse me. It's very shallow. And the number one way that you would close that is you would sink tankers out there, you would sink ships, you would sink ordnance. And this right here, if this goes offline, not only Or you're not getting any Iranian oil, which you probably aren't anyway. You're not getting Kuwaiti oil. You're not getting Iraqi oil. You're not getting Saudi Arabian oil. Why? Because you can't get it out of the Persian Gulf. That's the number one market driver. The second one will be terror attacks on international targets. United States, think Western Europe. It's a daunting task to trade WTI crude, but we can fall back on our technicals, and I'm going to give you my own technical outlook for WTI right now. And we got, let's see, Fabello. Good. I'm going to answer your question in 1 second. Thanks for tuning in. I just want to get out in front of this U.S. oil and sort of put it away. You can see right here, is the 920 crossover psychic? Can it see the future? Does it have a crystal ball? I don't know. We've seen some darn good 920 crossovers this spring. Tesla had a huge one. Netflix had a huge one. U.S. oil had a huge one. We went from $62, about $63, up to $75. All right, let's take a look at where okay, we know where we've been. Where could we be going? I love 70. 70 is just a battleground. It's a two-way area. You can see we could not sustain trade underneath 70 this week, and now we're just rocking and rolling to the top side. First thing I would be looking to do, highs. You've got to know where these key numbers and these highs are. Last week's high, it's absolutely imperative you understand where that is, 77.57. Be ready for that. Be ready for that. Potentially a breakout above 77.57. We could easily wash out. In my view, if that does happen, 2025's high, $80.73, and that was in early January. That goes right back here to January 13th. That was before Trump was inaugurated, and you can see that everybody's expecting lower crude oil prices with the drill baby drill Trump doctrine, and now the recovery's on. The last 3 weeks, it's been all about war. So from a broader perspective, where could we expect U.S. oil potentially to go? A lot going on here, guys. A lot going on. Monthly chart, we've got to go to our monthlies. We've got to figure out exactly where this market could go. Well, that's this year's high. That right there is 2024's high. That right there is going to be what? Probably 2023? 2023's high. So you've got to think in terms of just spike highs and just being aware of where these liquidity sweeps are. Very, very important that you understand that. We're looking at 2025s right now, and then right here, there's 2024's high right up around 87.81, and then 95.17. That's big, in my opinion. If you do see some major issues in the Strait of Hormuz, if you do see U.S. involvement and maybe some terror attacks from sleeper cells, I believe the WTI crude will go to $100 relatively quickly. If you see all of those things. Remember, it's the surprises that are going to shake up the oil markets. Just because there's missile strikes and war breaks out doesn't necessarily mean crude oil goes to the moon automatically. You've got to see surprise developments that catch everybody off guard. And when you get that, you're going to see repricing of assets, and you're going to see it in a big, big way. I would be looking at each one of these ports of call, 87.81. In my view, if we break above that 77.57 area, above last week's high, then I believe we're going to go ahead and print 80s and go ahead and give it a test. I'm going to look to scalp in front of 80 to the short, but I'm not going to be holding those positions. Be ready for volatility. Be ready for huge participation, and head on over to switchmarkets.com if you haven't already to get in on that WTI contract. If you are, in fact, with Switch right now, this is pretty much how you would be trading WTI. You would be right there, drag and drop your WTI contract, and you can see we had some old Fibonacci's there. I was going to go to our object list and just go ahead and get rid of those, and we'll go ahead and delete that off. You can see right there, where are we at? Right there, 76.91, something like that. There's your WTI. I believe that's a spot WTI light crude oil contract there over at Switch, and that's on your MT5 platform. So remember, if you're having any trouble at all, if you're a TradingView trader and you want to trade on MT5 and get your order entry in, be sure that you go ahead and check out this Pine connector. We're going to be making some more content that really dives into what Pine connector is, how it can help you, and I think that you're going to be pleasantly surprised with the functionality. I know that not too many of you are using this right now, but I know there's a lot of TradingView traders out there. And this this Pine connector is going to be your API bridge. It's going to give you an opportunity to link TradingView to MetaTrader 5. And so you can sit there, you can do your analysis on TradingView, and you can place your trades on MetaTrader 4 or 5. Now, the big thing to remember here is there's nothing wrong with using multiple platforms. I do it. I use TradingView for all of my analytics, and my order entry goes through one of my futures or Forex brokers. I like to keep my analytics from my order entry separate. You don't have to do that. If you just love MT4 and MT5, keep using MT4 and MT5. There's nothing wrong with that. Switch Markets does, in fact, support both of those platforms. It'll also be supporting TradingView relatively soon via Pine Connector. So if you're interested in that type of functionality, be sure to get down on that, link that up, get that API rolling, and take your trading to the next level. And really, I'm excited about that. We're excited about Pine Connector. We think it's going to be great. Okay, I'm sorry, Fabello. I got to get back to what you're saying there. Let me see. What exactly is going on in the market? Because I was expecting the market today would be moving better. I only catch one trade today at the Euro USD, and this is the only trade I take this week so far. Yeah, I'm going to talk Euro USD in a minute. Fabello, the big thing that's happening in the markets. Today is a bank holiday in the United States. It's Juneteenth. We talked about this yesterday on our FOMC live stream when we were covering Jay Powell's presser. Today, the markets are closed. Stock markets are closed here in the United States. Now, what that means, it means there's going to be some added liquidity out of the market. But here's the thing. We've seen big moves today, and everybody's gearing up for war. We saw moves out of the dollar. We saw moves out of the British pound. We saw moves out of the Swissy. And the reason why was those big-time events that happened during the U.S. overnight. I'm going to go ahead and check those out here in just a second. So there's a lot going on, but there isn't any. The market's, going to open again Friday as per usual. So be ready for some big-time volatility and some asset pricing that's going to be more to our liking. So if you're asking me, you're going, Shane, why the heck isn't the market moving today? It's because we have a bank holiday here in the United States. However, WTI commodities are on fire right now, and the reason why is those futures contracts, they're still trading futures. Let me see. Shane, are you smiling from riding this AM indices in oil? No, I'm smiling. I'm still beaming T Marine off the gold overnight session that came my way the other night. Fell into a heck of a rhythm, and I posted some of the results on X. I don't like to talk money because it doesn't do us any good. And I've always said this. I actually got attacked earlier today on YouTube. I got some comments that I laugh at. Honestly, if anybody wants to attack me, go ahead. I've been doing this for so long that it does not bother me. But the guy basically said something about being an influencer and this or that and the other. I am not an influencer. Let's get that straight right now. I'm a futures trader. That's what I do. I trade. I don't influence. I am here to help. If you guys have a question, I'm here to ask. Believe me, I want everybody that has an account at Switch or everybody that has an account anywhere, I want you guys to win. I want you to make money. I want you to trade, and I want you to win. And I can show you some from my book of beats, my beats over the last 15 years. I can show you how I've lost money and how I've made money. I can show you some of the psychological tricks I've learned that can kind of keep me on track for the long haul. And that's basically what I like to do. That's it. But as far as being an influencer, if you're out there watching, the gentleman that said that, I am not an influencer. That's like the old Charles Barkley commercials. I am not a role model. I am not an influencer. But I will tell you this. I can help you. I can show you some of the beats that I've taken and sort of share some of my experiences. We could talk platforms. We could talk strategy. We could do all these different things. But the number one thing you need to have to be a winning trader is psychology. You've got to have it between your ears. And what good psychology is understanding what you want out of the market, understanding your assets and what you have, and then figuring out a way to get there. If you can do those three things, your psychology will be rock solid. There's one last thing I'm going to say about psychology, and then we have a lot to get to here with the markets. You need to understand as a trader what you're trying to do with your life is vastly different than what everybody else does. Very, very few of us do this and do it well. Now, there's a lot of people that get in and they gamble, and they're hobby traders, and they take great big gains and some big losses. And if that's you, that's great. I have no problem with that. I like to gamble. I do. I just don't do it in the markets. Now, nobody really understands that. Nobody understands how you can sit in front of a screen and make a few $1,000s in a few hours. You have to remember, most of the world, at least here in the United States, and I know globally, they're working 9-to-5 jobs. They're working. They're going to the coal mines. They're going to the mines. They're working in the fields. They're working at the hospital. My wife works at the hospital. She's 5:30 to about 3:30 in the afternoon. She goes every day. She's on call on the weekends. That's life. I have neighbors over here. They work 410s. A lot of times they're at work until 8 o'clock at night. They genuinely, those folks that do that, they don't understand what we try to do. We'll spend all week trying to find a good trade and then cash in on that trade. So in your psychology, you need to account that, yes, what I'm doing is unique. But if you know what you want, what you have, and then craft a way to get there, that's what I'm here for, to help you get there, then you have solid psychology. Then you're a winner. If you come in and you don't know what you want and you don't know what you have and you're going to throw darts at a board, you're going to lose. I hate to say it, but you're going to lose. Sooner or later, the Grim Reaper will come calling and it'll take all your money. So if we can plan and really, really build solid, a good bedrock, a foundation, you do that through education, discipline, and consistency. That's how you do it. So I want to welcome everybody to the Switch Markets community. This is something that we've started relatively. This is a new series. This is probably about our first month of doing this. We're going to actually start putting videos out on the channel. There may be a change to the exact YouTube channel coming up, but don't worry. I'll make sure that all of you know. If you're a Switch Markets customer, you will be getting the email brief, and you'll be given the proper links so you can join us for all of our educational content and then also anything to do with trading. This is the Switch Markets community where you bring your ambition into focus. Thousands and thousands of markets, zero commissions. There's all sorts of different accounts, low spreads, zero commission accounts. What we're going to attempt to do, I know the team, I know the back office team, I know a lot of folks out there. We're going to be delivering you more value than you get with your average broker. You're gonna have access to all sorts of different tools. You're gonna have AI tools. You already have access to these things, but we're gonna start showing you how to integrate these into your trading. You're gonna have AI. You're gonna have Pine Connector. You're gonna have live streams. You're gonna have the ability to talk about your trading. And that's really a big thing because this can be a lonely endeavor. Believe me, if you're out there watching on your phone right now and you feel alone and isolated, believe me, 3 o'clock in the morning, I'm in here scalping gold. I know what that feels like. I know the rest of the world isn't doing what I'm doing, but I take a lot of pride in doing what I do, and someday you will too. So it's good to see everybody in here. Abraham, good to see you. God is good. Absolutely, Abraham. We need to really think positive about the situation and pray for the best possible outcome because we are in some dicey times. Yes, sir. Good to see you. Hey. Let me see. T. Marina, yeah, but you definitely have influence. Nah, I don't worry about that. I watch a lot of these influencers out there, and they're driving around cars. There's one young lady I follow. I won't tell you, but I do. I like watching her videos because she cracks me up. It's like every video is a different scene, and some of them are real formal, and some of them are informal, but it's all essentially a big show. I'm not into show, guys. I'm not into show. This tie is about as much show as you're going to get out of me. So many live in a Groundhog Day. Yeah, absolutely right. All right, guys, so welcome to Switch. Here's what we want to do today. We want to talk a little bit about our fundamentals, and then I want to get right out to the BoE because we had a trend line in the Great Britain pound that absolutely got smashed. This was our week, and this is pretty much what we're looking at. Israel-Iran is still your number one market driver, no question about it. Now we're talking U.S. intervention. That's huge. BOJ was big, didn't do much. The Fed came into play yesterday. We covered FOMC Live. I see a lot of familiar faces in here with the FOMC Live. I absolutely love doing those streams. Those are a lot of fun, and I think we had some fun yesterday, even though I was on about no sleep. That's okay. We'll take the money. We'll sleep when we're dead. We'll take the money. Take the money now. Sleep later. That's what I always say. Thursday, today is BoE and SNB interest rate decisions. Also, do not forget U.S. markets are closed. It's Juneteenth here in the United States, which is a newer federal holiday, and it means bank closures and also market closures, at least stock market closures. Forex is open. I believe we have a limited day on the futures markets, an early halt, and crypto. Crypto's always open for business. And then Friday is going to be the Philadelphia Fed survey. It's going to be a pretty good day tomorrow for our No Donation Friday. We're going to talk more psychology over how to trade. Feel free to join the live stream tomorrow if, in fact, you're interested. Not an influencer, but an influence. Okay, there you go. All right, that sounds good to me. All right, in any case, that's what we looked at this week. My personal psychology, Tuesday, Wednesday, Thursday, pedal to the metal. We're trading hard. Today, a little bit tougher to do that because it's Juneteenth here in the United States and the stock markets are closed. I don't like trading anything without understanding the broader market sentiment, but that's okay. You still could have made some nice money in commodities and the U.S. dollar today. Apologize for my nose. It's really dry. A lot of pollen here in Dillon. So if you see me scratching, I do apologize. It is rude. You just got to give me a little bit of leeway. Like I said, I'm not an influencer. I'm not polished up and perfect. What we do here is we trade. All right, central bankers speak. So we're going to start with the Great Britain pound. The BoE came in and really we expected potentially a rate cut. And you can see right here, 3 of the governors decided to vote for a cut. 6 voted unchanged. So we kept our interest rates unchanged. So that is sort of a hawkish type of a move, but you're getting the opposite. You're getting the absolute opposite out of price action out of the BoE. Now, if you remember right on this daily chart, here's your MT5 platform. We came in and we drew a pretty darn good trend line. Daily chart, spike low right there. We blew this trend line right through this area right here. That would have been your second touch. Your third touch would have been support. And we talked a lot about what happens when that trend line breaks. You know, it's the old song, the old American song, when the levee breaks, there ain't no place to stay. Well, the levee's something that holds the river back. You could think of the trend line the same way. I mean, the trend line holds price action essentially where it needs to be, theoretically, an area of fair value. Nobody had a problem doing business above the trend line, but once that trend line broke, see you later. Absolutely see you later. One other observation that I do want to point out, we had a key level right up there at about 136.50, and you can see that high, this high right here, right in that neighborhood. So about 135, 50-ish, something like that. Not 50, but about 25, 30. In any case, big time sell-off. We came reversal, bang. So essentially we were bullish against the dollar. We were bullish against the dollar until our trend line broke. We talked about this on our weekly pick to click, our pick of the week that gets emailed out to you in our Switch Markets newsletter. If you're not getting that and you're a Switch Markets client, request it. You'll be put on the mailing list and you'll get that every Tuesday. We've had some pretty darn good trade picks in there, pretty good analysis as well. So feel free if you want to sort of boost your trading aptitude going into the trading week. Our Switch newsletter can certainly help. This is a fantastic move, though, for trend traders. The trend is your friend till the bend at the end. That's exactly what happened here. You had just an absolute epic spike low, third test. Remember, we put out a video on trend line reversal trading, and you'll see right there, there's your third test, there's your bounce, and then there's your sweep lower, and now we've got a little bit of compression after the BoE speaks. Do you want to be long or short right now? Probably want to be short just because the trend line broke, something like this, but you may be able to wait for a retracement and another test of that trend line and potentially sell it. You could certainly do that. But I would probably have a short side bias, at least for right now. But it could be tough. It could be a little bit tougher as we roll forward because that BoE not cutting interest rates, that's a hawkish move. And that suggests that this pair, this Great Britain Pound USD, the cable, is probably going to rise over time. So do you want to hold shorts and bet on the dollar with a war coming on potentially? I think the dollar is going to gain strength if the U.S. starts striking Iran, just because it will suggest that there is a new theater, a new war theater opened, and typically the U.S. dollar draws bids during times of uncertainty. No question about it. Let me see. Shane, do you suspect a rate cut before the end of the year? If so, do you think it'll be one of the massive cuts or a smaller sequential cuts? I don't think they're going to cut. We can talk a little bit about what the Fed's going to do. We saw the dot plot yesterday from the United States Federal Reserve, and what that means is all the FOMC members, they all hang out and they issue their expectations. And for those of you that saw the stream yesterday over at How to Trade, you'll remember how hard I was on Jay Powell because he basically said the dot plot doesn't mean anything, and I said, well, okay. But from my point of view, I think that it's going to come time to cut interest rates, and it's not going to happen. Now, if this U.S.-Iran war gets out of hand, you better cut rates, and you better cut them fast, or else you will. I remember I got really ridiculed by a lot of folks about my recession call. I was calling for a recession. I don't know if anybody remembers that watched some of those old streams about a month ago. I said, yeah, you're going into a recession. We have one negative one negative quarter of GDP. If we get another one in the States, it's a recession. If the war in Iran expands, it doesn't look like it's going to be a quick winter, you're going into a recession. Guarantee it. $130 crude oil will push you into a recession, and that means that Jay Powell better cut rates, and he better cut them fast. But I don't think it's going to happen, guys. I would bet against it. I think it's going to come time to cut interest rates, and they're going to say, nah, we're going to leave things the way they are. I'm going to talk a little bit about that in just a second. Okay, guys, the second one that I want to cover is the the Swiss National Bank, not the Bank of Swiss, the Swiss National Bank, the SNB, and that was really a big deal during the overnight. You can see the trade balance figures, throw that out. That means nothing. SNB interest rate decision came in at 0%. 0.0%. That means that the SNB, the Swiss National Bank, who really are the cowboys of the world's banking system, these folks do what they want. I mean, when they put on the hat and the spurs, they do whatever they want. And typically they don't tell anybody. But we knew this. We knew that the SNB and the Swiss National Bank wanted to get to a negative deposit rate as fast as they could. And they've done that. They're right at zero. My guess is they're going to cut again, probably relatively soon in the next quarter. And then Switzerland will be back to that negative deposit rate that they typically promote throughout the year. And that's just the way that it works. Bobby Bob, good to see you. Bobby Dave, F19. Scary times. Absolutely good to see you guys over at How to Trade. Sorry, I'm working like 3 live chats. So if I miss your message, don't take any offense. I always say what's up and hi to everybody because it's important. We have a sense of camaraderie as traders. It's very difficult to make it on your own in this game, and that's why we're really launching the Switch Markets community. You realize that, I hate to say it, but you're never alone in the markets. You can always talk to somebody. You can always say, hey, I'm struggling. What should I do? Trading's hard, guys. It's hard when you win money because people don't understand how much you made and how fast you made it. And it's hard when you lose money, because when you lose money, it's just you there. You're all by yourself. So what we're trying to do here is give you a sense of community as we roll forward in time and really try to build everybody into the best trader that they can possibly be. And I believe in that. Good traders are built. They're not born. Remember that. Some of us have a little bit better leg up on the competition. Paul Tudor Jones, one of the greatest investors of all time, started off rich. When you're rich, you got a better chance than folks like us that are retail, that are trying to make it in this game, that don't have $100 million. That's just the way it is. Doesn't mean you still can't be a great trader, though, and achieve your goals. That's very, very important to realize. Okay, weekly chart right here on the Swissy. You can see that it's just been an epic downtrend, just a break, a little bit of a retracement here, and now a break. Let's get over to TradingView and sort of show you what I mean by really good stuff on the Swissy as far as a Fibonacci trade. This is sort of my bread and butter, is my Fibonacci retracements. Those of you that have watched my live streams over time realize that I've drawn literally 1 million of these. Let's go ahead. Let's go ahead and get rid of everything here. The reason why is we just need to think clearly, streamline the approach. The trend is down. The long-term trend is down here for the Swissy. There's no question about it. There's a lot of reasons for that. People love holding Swiss francs during periods of uncertainty. You want to definitely get in there and say, okay, what does that mean? It means that Swiss franc's probably going to be, the winner over the U.S. dollar, especially if you see war. This was beautiful today. Spike high, spike low. Swiss franc comes in. They cut interest rates to zero. That's going to make this pair, this U.S. dollar Swiss franc, it's going to make it rise. The dollar is going to gain a little bit of ground on the Swissy because of that dovish move. But take a good look at what happened at our 38% level. 82.16, the seller stepped in and they dominated the action. They absolutely dominated the action. And the reason why they dominated the action is because the trend is down and everybody's following this trend. They have no desire to bet against, to bet on the U.S. dollar over the Swiss franc. And the big traders, the smart money, they're absolutely correct. They're 100% correct. So when you look at a chart like this, I say, okay, number one, I have two keys when I use Fibonacci retracements. Number one, if we're beneath the 38% level, that means that our bearish trend is strong. It's not just there, it's strong. The second one, if we're beneath the 62% level, that means our bearish trend is intact. It may not be as strong as it once was, but it is intact and it is valid. So this right here, I would view this as being definitely still a sell. You would look at 38% and say, Shane, how would you trade that? Step up and sell, probably right 12s or 14s, and you can see you've got a really beautiful pullback on that Swissy. That's a confluence of some technical indicators. That's some confluence of really, really good stuff when it comes to having great technicals and then great fundamentals. I'm a hybrid trader. I know what the fundamentals are and what's going to move the market, and then I have a technical approach to trade said price action. That worked beautifully. That worked like a charm. The only problem was I wasn't up at 12:30 a.m. my time to catch that trade. I had to get some sleep. I didn't sleep much the night before. So what's going on in interest rates? Here's the interest rate hierarchy in the world. Remember, a higher interest rate typically means a stronger domestic currency. Well, that ain't happening. So Switzerland, they went to zero. Japan is going to be shortly behind Switzerland. They're going to be going to zero and negative as fast as possible. You've also Singapore. We'll talk about that. Eurozone right around 2.15. Okay, well beneath where the U.S. is. South Korea, Canada 2.75. China 3%. Australia, United Kingdom, and then in comes the United States. So the global monetary hawks are going to be the United Kingdom and the United States. Those are the folks that are sort of falling off the lead lap with rate cuts. They're not cutting interest rates, and they haven't this year. Or, well, the BoE has. The Fed hasn't. This is a fascinating chart because at what point does the United States start moving up this list and cutting rates? And one more thing. If, in fact, a higher interest rate leads to a stronger domestic currency, then why in the heck is the USD in such bad shape? This is the US dollar index, the DXY, selling. You can see right there a 38% level. Current wave is definitely coming up right there at about 99.25-ish, 99.28. That's probably going to be a sell for most of the world. Keep an eye on that level. It's very, very important. You definitely don't want to miss that trade. If, in fact, you trade the DAXI, I don't. Personally, I don't trade it, but it's a great, great reference. That's for sure. Let me see. T. Marina, Melinda gave you the business for saying it. Yeah, as soon as I said recession, Melinda got angry and said, I quit and I'm unsubscribing and I hate you. She didn't say she hated me, but she didn't like me. She didn't like what I said. And I said, hey, that's okay. I wonder if Melinda's going to come back if that projection turns out to be right. Maybe it'll break through a little bit. She'll say, man, maybe I should listen more instead of just yelling at people in all caps. Remember, Number one rule of trading is don't get angry. Don't trade angry. If you find yourself frustrated and angry, go do something else. All right, we got 2 markets left unless there's anything that you guys would like me to look at. I'm more than happy to run any chart that you would like. We're going to go ahead and do it on TradingView for right this minute. Remember that Pine connector can hook TradingView up to your MT5 platform to get you up and running. Okay, so here we go, Euro USD. The question was earlier today, Euro USD, what do I do with it? And I'd say, well, you know, to unpack the technicals here is relatively simple for me. I looked at this and I said, yeah, it's going to be a buy relatively soon. I'm really not believing that the U.S. dollar is going to make a move against any of these majors until we see something significant happen. A war could be that catalyst, though. So for right this minute, I believe we put a trade idea out just a bit earlier over at How to Trade. So remember, if you're a How to Trade member, you get these things sent. All you do is follow me. You get these things sent right out to your inbox. And our bid was somewhere right around 114.26-ish, which is going to be right in this zone. So I'm looking for a little bit of support here to develop here on the weekly chart for the Euro USD. One of the things that I really like to do is I like to use my long-term anchor points and trade them on real tight time frames. And that gives me an opportunity potentially to come up with some great scalps, some great short-term trades, and really that's what the game's all about, is just getting the odds on your side any way you can. And this is one way that I found to do it. So this anchor point here for the Euro USD, going to be right around 114.14. I like a 26 bid. I want to be aggressive here. I have no problem betting against the U.S. dollar. It's been nothing but weak. We're going to have to see a major catalyst to change the direction of the USD. Hey, listen, I showed you the interest rate hierarchy. Interest rates are high here in the United States, and they're high compared to everybody else in the world, all the other, I guess, G20 nations, you could say. You're definitely higher than everybody else, and your currency's still losing puff repeatedly against the majors. I'd be looking somewhere right around there. That 38% is a pretty good bid. That trade idea was out earlier today. That's a nice support zone. If, in fact, we do go to war, though, and things get significant, scary, that's pretty much my line in the sand for this. I mean, I would be looking to trade this fairly aggressively up here, but this one right here, down here, back into the golden zone, 62%, potentially for next week. We've got our 13-period EMAs down there right around 112.50. We've got 62% at 112.80-ish. This could be absolutely fantastic and potentially a position trade to the long. I'm not ready to start betting on the U.S. dollar just yet. Probably this fall if Jay Powell doesn't cut interest rates, and a lot of us don't think he is. We think that a lot of the hype's overblown. All right, last market here, and then we're going to go ahead and sign off. We're going to click on to your gold market. Now, this was a trade idea. I had it up in the air. I said, do you want to go euro? Do you want to go with the Euro USD, or do you want to go with gold, with spot gold? And I said, well, I'm a little bit scared of spot gold, and the reason why is because of the war. Anything can happen with gold. I'm still bullish. I'm looking for a discount buy. I think we could get our discount buy right down there around 33 and a quarter. Absolutely love that trade. I think it's fantastic. So this zone right here, something like that, 33 and a quarter is not a bad area to take that shot to the long, a nice pullback value buy, and you can see all of the action right in that zone. I mean, that's a serious, hotly contested area, 3,300 to 33 and a quarter. I think we could definitely get a nice bounce out of there. How would I execute? Probably buying 33 and a quarters, looking maybe to pull $5 or $6 out of it. 1-to-1 risk versus reward, probably not risking any more than 5% of your account balance on that trade. Remember, if you don't have risk management, you don't have anything. That's a pretty good level in gold, though. So something to think about there. Let's take one last look at this right here, U.S. oil. 74.84, we're getting compression right around 75. The high today is 75.70. Let's go ahead and take a look at that gold market on our 920 daily crossover. What's happening? Okay, we had a bid here. We had a bid right there. Our bid was right around 33.16. And we've just sort of ground north. So what I would say is this. You still are bullish. Remember our trend line trick? Something like that maybe. Trend lines don't have to be perfect. If you wanted to do that from right there, you could go 1 touch, 2 touch, 3 touch, 4 touch. And now we're trying to break out. It's imperative, though, with something like a gold or if you're trading trend lines, you got to get that bar closed beneath the trend line. Do you want to expand the trend line? See, this is where trend lines start to turn into trouble because no one really knows how to draw them. They're tough. That could be your trend line. Spike low, 1 touch, 2 touch. Now you're bouncing off of that. Trend line also coincides with the 20 EMA. I would be watching this closely. If I was trading a 920 daily on gold, I'd be waiting for that crossover, probably be beneath the trend line, and then you just fire to the short. I am in no hurry to hold shorts on gold. I am not interested at all. All right, everybody, I'm going to go ahead and sign off. We got a question here from T. Marina. Shane, I reviewed my trading journal and see that my 5813 EMA, Xover strategy, Xover strategy, a crossover strategy is unsuccessful in trading RSI confirmation, but successful with no confirmation. Any idea why? Well, probably with the confirmation, we're missing out on too many trades. So the first thing I would ask, okay, 4-hour time frame, you don't need confirmation on that. I'm going to make a video that shows exactly when and when you don't need confirmation. Confirmation, save that for short time frames, 1 minute, 5 minute. I think about, as soon as you get right around, maybe even a 15 minute, but I think 15 to 30 minutes, and you're talking 4 hours. If you're on a 4-hour Forex chart, I wouldn't go with any confirmation. In my view, with that long of a duration, 4 hours for each price bar, in my view, the 13 EMA is your confirmation tool. Remember, the 13 is the most important on that 5813. Gives us broader market direction, shows us which way the pricing action is and which way the trend is going. So if I was doing it, no, I wouldn't be doing any confirmation with a 4-hour chart. 5-minute chart, yeah, you need all the help you can get. Remember, I mean, if you go to short time frames, 1 minute, 5 minute, 3 minute, whatever you're trading, there's going to be a lot of trades, and hey, listen, you're going to need anything you can do to filter out the bad ones. Even if you lose a few good ones, that's going to help you. But on a 4-hour trade, 4-hour chart, there probably aren't enough setups to really start filtering them out. I would use that 13 EMA as your filter. That's my opinion. That's how I would rock it. Hope that helps, T. All right, everybody, I'm going to go ahead and sign off. I've rambled on long enough. Absolutely, Tuku, you're welcome. Thanks for joining us, everybody. If you have any questions at all, be sure to head on over to howtotrade.com. You can join it. You get a free account. Go ahead and send me. Click on my picture. Send me a message. I will get back to you. I answer everybody. Just ask around. If you have anything to say on YouTube, you just leave a comment below. This live stream is going to be posted there on the Switch Markets YouTube channel. Just feel free to go ahead and post anything you'd like under there. If you have any questions, any comments, go ahead. We'd love to hear from you. And remember, I mean, these are interesting times. You've got to watch your risk. You've got to be extremely careful because these markets are supercharged and these markets can get away from you. Meaning, okay, I'm going to go ahead and take a leverage shot on WTI. Well, you better be careful because the market, if this war does break out and expand the way that most of us believe it's going to, you're going to see WTI moving in 10-cent intervals instead of 1-cent intervals. In those daily ranges, I believe my range oscillator, I expect about 300 ticks in a day right now at a WTI, something like that. May not be that high. It was right around there, though. Those will go to 600 and 900. The ranges will get really huge. And just because you're trading big ranges, it doesn't mean you can't do it. It just means you're more than likely going to get stopped out because it's really hard to hold positions when you got like a $6 daily range. How do you do it? You get lucky, that's for sure. I like lucky. Sometimes it's better to be lucky than good. All right, everybody, that's a wrap. Thank you, T. Marina. Shane, you're an awesome mentor. That's awfully kind of you. No, believe me, I always bring up the critiques and the criticism because I like it. It's a lot of fun, but I also get just a lot of really positive feedback from everybody out there, and I really would like to say thank you. It's always fantastic to hear good things, but I mean, just as long as everybody's thinking out there, and always be skeptical. Remember, always be skeptical. There are 1,000,001 people on YouTube telling you how to trade and what you need to do to be successful. And my guess is probably 990,000 of them are liars. So you got to be really skeptical. If you have any questions for me or what I do, I'm more than happy to answer you. That's just a wrap. All right, guys. You have a fantastic trading session. It's going to be interesting. Absolutely, Bobby Bob. You're welcome, 100%. You guys have a fantastic trading session. Remember, buckle up. This is going to get serious here as we roll into the weekend. We've got another live stream scheduled tomorrow over at How to Trade, and I believe that one's the weekly wrap, and it's going to be about the same time. So if you want to watch those live streams and you're a Switch fan and you're, a Switch client and you're not over at How to Trade, go ahead and check that out. And if you're How to Trade and you're looking for somewhere to trade, head on over to Switch Markets. The symbiosis, the relationship there is going to be fantastic. Cannot wait until we get a little further down the line and deliver some of the value that we can to the traders out there. All right, guys, that's a wrap. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.